One of the fundamental concepts of investing is the idea of diversification. Don't put all your eggs in one basket. Now, there are a lot of reasons that we diversify, but I'm going to use an example to help you understand it. Let's say that we were all invited to a race, and everybody was given the ability to show up with whatever vehicle they wanted to have at the race. And here's the thing. There's a big veil in front of the racetrack, and we don't know what the terrain is. So one person shows up with a snowmobile, another with a race car, another with a motorcycle, another person with a dune buggy. Now, let's say that the terrain turns out to be snow. Well, the snowmobile takes that leg of the race. The motorcycle will probably wipe out, and the race car will be slipping all over the place. If a little bit down the road, all of a sudden now we have sand, the dune buggy is going to do well in that terrain. And then we end up with a racetrack, and now the race car gets to shine. Then all of a sudden it turns to a treed course, and the motorcycle can weave in and out, and the other vehicles aren't going to do so well in that terrain. It's just like investing. A lot of people own a lot of different mutual funds, many different mutual funds, but a lot of times what they do is they own a bunch of snowmobiles. They own a lot of funds that are investing in the same exact areas of the stock market. So they only have what we call perceived diversification. True diversification might be we have U.S. versus international stocks. When the dollar is dropping in value, international does well and vice versa. So sometimes U.S. will do better when international won't, and the other way around. Sometimes really big companies do very, very well when economies of scale are important. Think of Walmart moving into a town and putting the hardware stores out of business. Sometimes it's really good to be big, but sometimes it's really good to be small because small companies can turn on a dime and they can respond to new technology and new information faster than their big counterparts. Owning the right types of bonds can also protect us from certain types of economic terrains, like with stock market downturns. The idea behind diversification is not just owning a lot of things, but owning things that move in dissimilar fashion based on the changes that we see in the economic terrain.